See? Okay, now the recording is turned on. So let's start again. This company has year-end February 1st, 28th, accounting records at 31st show these accounts here. We have to prepare that cash inflow and outflow for operating activities only during the month ended March 31st. So we're doing only 1 month. So the starting point of the indirect method is the net income. And as we just said, can we get the net income from somewhere? Obviously we can. Which account we're going to check? We're going to check the retained earnings. And from the retained earnings, we're going to get the $71,000, which is our net income. I'm not sure if I do it this way is going to work, but probably it's going to work. Yeah, 71,000. Next thing that we have to do is start chasing the elements which are affecting our net income in order to converting the net income into the cash. Now, the difference here in this question you're going to see is we're not doing the way I show you, split it by 2 adjustment for the non-cash items and changes in the working capital, but that's because of the format that you're going to see in Connect. But that doesn't change the fact that first we have to do changes for adjustment for the non-cash item. And the first non-cash item, it's already given to you. You don't have to worry about this. You don't have to choose this one. It's already given to you. The only thing that you have to put is the numbers in the blue sections. In this case, amortization is $10,800. You just grab it and put it there. Next thing is we have to see is there any increase in accounts receivables. For that reason, we're going to go and check this accounts receivable account. And what we're going to get? Beginning balance minus the ending balance, correct?
Yeah.
That's exactly what you have to do it here. You can literally get the beginning balance
Minus the ending balance.
minus the ending balance. Boom, is going to give you the number right there.
Yeah.
And you don't even have to worry about this. Now, next, see the shoe inventory. So once we do that, we mark those one in yellow. That means I'm done with this information. I don't need it anymore. The next one.
Ending balance minus the beginning balance. Yeah.
Same thing. Equal to beginning balance minus the ending balance. Boom, done. This one yellow, and this one is also yellow. Done with this. The next thing that we have to do is we have to check the increase in accounts payable. Payable, we're going to see the accounts payable here. So what was the idea here? We have, that will be minus in the bracket now. We're going to have beginning balance minus the ending balance. That's the only thing that we're going to change.
Mr. Evan, I just have a question, please.
Yes.
So in the assignments, when we have to do like this question, we have to put the decrease accounts in the brackets, right?
Right. No, listen, no decrease accounts. Liability accounts.
Okay, like now we have a number in minus. In the assignments, we have to put these numbers in between the brackets. Is it the same thing in the final?
Yes.
Okay.
Absolutely. We're not going to change anything.
Okay.
That's why we're doing this together.
Okay.
The same idea.
Okay,
so,
sure.
but that's why I told you this approach with the brackets, beginning balance minus ending balance for the assets, and minus bracket beginning balance, ending balance for the liabilities. It doesn't matter where you're doing this exercise, even if you go to some other teachers' classes.
Okay.
If you use it, always work.
Okay, no, because they like it decrease a mark from us if we don't put it in the bracket.
Which one?
Yeah, you remember accounting first?
No, hold on a second then. Then don't I have to check on this question. On this
Okay.
question, I have to check. But since I'm not good, because this is very simple question, I'm not going to give you this question, so you don't have to worry about this one.
Okay, because I did same question just yesterday in the assignment. We have to put the increase in accounts receivable between the brackets, the number we're getting.
What do you mean?
Yeah.
This one not minus in brackets.
Yes.
Okay. Let me check if that's specified in the question.
Okay,
I'm
sure.
gonna check the question, and but let's move away from this question. Then we're gonna move to the next one,
Okay,
and
sure.
then I'm gonna tell you exactly what to do.
Okay.
So accounts accrual liabilities. On the accrual liabilities, what you have to do is again that will be negative bracket beginning balance minus the ending balance. Close the brackets, and we're done. And the next thing that you have to do here is get all those numbers. That negative 70 and 200, I believe. Let's see if that's the case. 70,200. Yes, let's put it negative.
I think expenses was selected instead of the ending balance.
Oh, there's really? Okay, let's see. Yes, you're right. Thank you. Well, we're gonna find out once we start doing the once we try to match the cash, right? So here we have we're even worse, 84 84 200 should be. Let's see if that's the case. 84 200, and this the total will be negative 13,200. Is that the case with our cash? I don't see that the same thing going on with the cash though. Payments 156, collection that much. Miscellaneous expenses. Oh, because of the dividend. There always going to be difference between, but because this is a partial, we cannot say exactly what's happened with the other section. So it will be hard to balance this number with the cash. So if that's happened to you, again, we're not going to see. I'm using this question only to show you the format of the connect and how the questions will be listed. So if you see something like this negative, then the next question always going to be does the business have trouble collecting receivables and selling inventory? What you can say is yes, the company definitely have problem with the collecting receivables and definitely have a problem with the selling inventory. Why? Because they purchasing the purchases are way more than the whatever they're selling. And that will be that analytical component in the question which you have to respond to. Now, any problem? Do you see any problem with this type of question?
No.
No. That's why I expect that one. So for that reason, that's not going to be on the exam. But this type of question definitely is going to come on the exam. So in this type of question, what you're going to see here is use the income statement this company plus the additional data during the fiscal year. And what we have to do, we have to prepare the cash flow statement for the year ending September 30 using the indirect method. So first of all, observe the information. Information is going to be given on different screens. Observe the information, get the income statement, see what's on the income statement. Then check the additional information. As you can see, we have a lot of additional information here. I haven't been able to format everything proper way, but it's gonna be like this, and this one's gonna disappear. of this amount, that's how much was paid in cash. And for the remaining, they signed they even give you that information, so you don't have to worry about it. For the remaining, they sign long-term note payable, which always helps a lot when they give you that many information about the question, so you don't have to worry about how much exactly was bonds payable. So what we have to be careful here, you have to be careful to identify which one is the cash item, which one is not cash item. So they're not selling any computer in the fiscal year, that one. Now, next one they have, I think I lost the alignment here. They haven't sold any equipment, which helps a lot. They receive cash. Their cash received from sale of land was $23,000. So they sold that land and they received $23,000. The other thing that they were able to do is cash received from issuance of common shares was $96,000. $96,000. Payment for the long-term note payable was $50,000. Even that amount is given to you. And payment of dividend, even the dividend is given to you. The dividend is $140,000. So that seems to be a very, very straightforward question because everything is given to you. And you have the balance sheet here given to you as well. So we have the cash, we have the accounts receivables, we have the office supplies, we have the prepaid expenses, we have accounts payable, and we have accrued liability. Nothing else is given to us. We don't have information about anything else, because that's a partial balance sheet. And at this point, what we have to do, we have to prepare the cash flow statement using the indirect method for the operating activity only, right? So in this case, starting point is net income. So again, once you see the template, the only information that you have to put is in the blue spaces. Make sense? Only on these blue things that make a different color, so you can more blue, so you can see exactly where you have to put the information. Nothing more, nothing less. So you don't even have to come up with the name of the lines. The name of the lines are given to you. You just have to follow the names. Just to fill the gaps with the amounts. So what will be the approach here? It's up to you. Now, if you do it at home, obviously you can easily move to Excel spreadsheet the way I moved to Excel spreadsheet. If I can move to Excel spreadsheet, you should be able also to move to Excel spreadsheet. Once you're on the Excel spreadsheet, the life is way more easier. Why? Because I don't have to do any more calculations. So you have to just get the net income, that's my net income, boom, done. So the next thing, just follow the format. Amortization expense. From where I'm going to get the amortization expense? Obviously from the income statement. So what I have to do, equal to 74,000, boom, amortization expenses done. And the next one, you're gonna start. They even give you the, is it decrease in accounts receivable? Is it increase on what? You don't even have to think about those things. But if you want to be follow the format that the way that we did it, simple, follow the same format. For the assets, beginning balance minus the ending balance. Boom, you get the number. Next one, office supplies equal beginning balance minus ending balance. Boom, done. Next one, we have prepaid expenses. On the prepaid expenses, the balance is the same, so I don't need to do, there is no changes in the prepaid expenses, so I don't have to worry about the prepaid expenses. Then I'm moving to the liabilities. Once I move to the liabilities, if using the same formula, don't forget negative bracket beginning balance minus the ending balance. Close the bracket, enter, give you the number. And the next one is again minus bracket beginning balance minus the ending balance. Close the bracket, boom, done. Then what you have to do, calculate those numbers. Since I'm on the Excel spreadsheet, it's going to give me here the sum of 197. And I'm going to plug 197, 1, 2, 3 here. And once I add those two numbers here by using Excel again, I should naturally get my answer. Make sense?
Yes.
That's how I want you to do those questions. Now, the question was, let me double check on this. I'm going to go now to the question and see how do you have to enter the information, with plus, with minus, with bracket, with no bracket, how exactly you have to do it. Just a second, let me check the actual question, and I'm going to tell you right away.
On the assignment, I just used the minus sign and it worked fine.
Minus work fine?
Yeah.
For me, I use bracket.
Now,
I think you can do both.
for some using brackets, for some using negative, it doesn't specify on the question. It doesn't explicitly communicate, do we have to use the brackets? Actually, you know what it says on the question? I'll show you what it says on the question. On the question, you see this. Let me go here and I'm gonna paste you exactly what says on the requirements. Can you see this? This part only. Use parentheses or minus sign for cash outflows. So regardless what you're gonna use, it's gonna work. You can put brackets or you can put minus sign, it's gonna work.
Thank you.
Right? That's the confirmation of what we just talked about. Just watch the question. The question should explicitly communicate with you what you have to do. Now, once we figure out that one, let's move to the next section. And the next section is on the next section, what we have to do is follow the format. Acquisition of computer equipment. So let's go to the information of the computer equipment. Acquisition computer equipment was $232,000. Of this amount, 204 was paid in cash, and the 28 signed a long-term note payable. They even give you the cash. Probably, if it was me, I would say out of 232, 20 for the 28 was signing the note, a long-term note payable. The rest was paid in cash, just to make you do one calculation. So give you a chance to make a mistake. Here they don't give you that chance. They directly give you the amount. So what we have to do, we have to enter this amount as a negative, right? Negative 232, 123. Boom, done. Next one. Cash received from sale of land. So now we have to find out the land. Cash received for sale of land was $23,000. And we put $23,000 here, 1, 2, 3. Boom, done. What do we have to do? Combine those two amounts and put here 2009, 1, 2, 3, negative amount. Because it is just, we spent too much on the acquisition of computer equipment.
Excuse me, Ivan, I have a
Yes.
question about acquisition of computer equipment. Can you show again, please, what we shouldn't subscribe to 232 minus what cash paid.
No. No, watch this. In the question, it's everything is going to be given to you. So technically, you don't have to calculate anything.
I'm agree, but okay, but in assignment, I subscribed that amount.
What do you mean?
So I'm just take 232,000, subscribe minus 28.
Yes.
But you didn't. Can you show me again where is the chart?
Why do I have to do that?
I'm just wondering why you shouldn't do that.
Why would I do it? My cash is directly given.
Okay.
Do you see this?
Yeah,
Out
I
of
see.
this amount, 2004,
Mhm.
$204,000 paid in cash. And at this point, I can even easily ignore the rest of the sentence. Make sense?
I think she's asking because you put 232,000 on the line instead of
I see. No, I'm wrong here, obviously. I'm wrong here, 2004. Sorry, I'm 2000.
It's okay. It was my
Sorry.
concern about that.
Sorry. I didn't. I was thinking that I'm putting 2004. Sorry, my mistake. So in this case, again, you don't even have to calculate it. But yeah, you're right. If I do it the other way, I should have deducted 28. But I'm just going directly with the cash amount. Okay, so in that case, that's not the right amount. The right amount here will be 181, negative 181, 1, 2, 3. Boom, done. Okay, so this one is done. Next one, and just follow the format which is given to you. Cash received from issuance of common shares. Go to the additional information. That probably will be the next on the line, number C, and you can see the cash issues of the common shares. We receive cash of $96,000, and you just add in here 96, 1, 2, 3. So technically, that will be, there should be no challenge for you, and I don't expect you to have any problem with this question. So payment of the long-term note payable, 50,000, even though it doesn't say cash, if you follow the format of the cash flow statement, says payment long-term note payable, match it with the long-term payable, long-term note payable, 50,000, negative 50,000. Just don't forget which one is positive, which one is negative. When you pay long-term debt, that will be negative, definitely. The next one is the payment of dividends, $140,000. Now, it doesn't specify is it cash dividend or whatever dividend is, but you naturally assuming that in the normal course of action, they just paying the that $140,000 as a cash dividend, and that's all. One more zero here. Elena, are you gonna go with the counting?
Probably.
Why
We'll see.
probably?
I like taxation more.
You which one you like? Taxation?
Mm-hmm.
Well, the taxation is part of accounting.
But yeah, but this is this specific field.
Yes, it does. It is. But once you finish the accounting, you can go with the with the CPA. You can practice on the taxation. No, the reason that I'm asking you that you're paying attention to details, which naturally you already have one of the skills of the accountant, which for some people they have to develop that skills. You naturally have it, so that's the only reason I'm asking. So 94, 1, 2, 3. It's the net cash outflow. So the other thing that I want you to pay attention is on the terminology. If it says outflow and having here positive amount, it doesn't make sense. If you have here, if the question already, if the format in the connect already says here outflow, and you end up here with the positive amount, it doesn't make sense. Otherwise, it will be cash, net cash inflow. As you can see here, net cash inflow, that means the amount here is definitely positive. But once you see outflow, that means the amount is definitely negative. So if for some reason here you forget minus, or you're just ignoring the minus, go here, pay attention, see outflow, that means it has to be negative. So net increase, decrease in cash. Now I can get it simply by calculating those three numbers, and it should be able to get it 13,500. You can double check yourself. Is it 13? Yes, 13,500. So cash at the beginning of the year, and now we can see the cash at the beginning of the year was $42,000, equal to that amount here, $42,000. Cash at the end of the year equal to 55,500. So is that explain what happened in this company? Looks like it does. Because the net increase in change plus the beginning balance gonna give you the ending balance, 505. So non-cash investing and financing activity, acquisition of the equipment by issuing the note payable, that will be only for the note for $28,000. 1, 2, 3. And that's about it. That's what you have to do. Now, this question is going to have another part, which is analytical part. Now, for that analytical part, you have to come up with the answer. I prefer not to give you that one, so you can kind of work on that part by yourself. I think that's fair. So basically, you have to do some analysis, how much cash coming in the company, where the cash is used. Obviously, you're using the cash for the investing activity. We're using the cash for the paid month of dividend, and to clear some of the long-term notes payable. At the same time, we getting some cash from issuing the common shares. And something like that you have to do, and that explains the increase in our cash at the end of the period. The other thing that can maybe ask you is this company in the healthy kind of situation? Yes, it is. Why? Because we have net cash inflow from operating activities. Once we have a net cash flow from the operating activities. That means the company is healthy. They're doing very well. As you can see that they're generating net income. Now, most of the cash here, as you can see, coming from the decrease in accounts receivables. What that means is that comes from the current period or from the previous period. That's another thing that you have to be able to identify. Is this increase in cash related to activity from this year, or this is related to activity which was done before on the previous periods? Make sense?
Yes.
That's I need you to be more than just preparers of the cash flow statement. I want you to be able to see the numbers and to interpret the numbers. Yes, it's good that they're generating net income, but again, the most cash coming not because they did something good on this period. Most of the cash coming because they collected the cash that the sales that they haven't collected the previous periods. You have 228,000 cash coming from the accounts, so the decrease in the accounts receivable. That's an enormous amount. Definitely helps you in accounts receivables to bring them down to $34,000. What's going to happen next year? Next year, you're not going to see decrease in accounts receivables because where the accounts receivable is going to go down to zero. That's pretty much unrealistic. That's another thing that you can do. You can use the cash flow to try to predict what's going to happen in the company eventually, to some extent, right? It's always difficult to make those predictions because you don't know what's going to be the business environment for the next year. That's with the cash flow statement. So I like this question because there's not, it's, how can I say, do you see any challenge in this question? Honestly.
No.
I don't see any challenge either. But unfortunately, this is the level of the difficulties that you're gonna get from the, like we can get from the Connect. So I'm gonna leave it the way it is. And I'll see if I can make some changes. That will be most likely here on the information. But at this point, the only change in the information that I can do is to eliminate, so out of this amount, I can say that 28 was paid by signing long-term payable, and the rest is paid in cash. That will be the only challenge if I can add, I'll try to find a way to add this one, but that will be the only challenge. Anything for the everything else, you need comparison with the asset accounts, long-term assets and long-term liability, which is not given to you in the original information. Questions on this question? Any questions? Anything that you see you want to ask me about this question? This type of questions on the cash flow. In generally in the cash flow, any questions on the cash flow? You're not saying anything. Is that because you understand everything or because you don't want to ask me anything?
No questions from me.
No questions for me?
No questions. I understand everything.
Okay. Let me find one question from chapter 12. Now for chapter 12, from chapter 12, the question is gonna come from allocation, profit and losses to the partners, and by different methods. Not only simple method, different methods. So what that is gonna be, let me grab one of the questions and I'll show you right away. Just give me a second. There's one of those magics here. You guys still can see my Excel spreadsheet, right?
I can.
So this kind of question is gonna come, or similar. I cannot say it will be exactly the same, but something similar. So in this company, those two people from partnership invested 150, 175 respectively, determined that their shares of net income or net losses for each of the following situations. Company has net loss 170 and the partners have no written partnership agreement. Net income is 105 and the partnership agreement states that the partners share profit and losses based on their capital investments. And the net income is 290. The first 132 shares based on the partner capital investments. Next 100,000 shares based on the partner services, with Danilo receiving 20% and Gordon receiving 80%, the remaining share equally. Something like this. So what we have three different scenarios, and under each scenario we have to identify what's happened with these people. Challenge with this type of questions. Do you see any challenge with this type of questions? No, this is on the chapter on the assignment that it's not mandatory. It's only for practice, but there'll be question, and I told you that there'll be question, and that will be the level of the difficulty on the question here. Allocation of the net income or net loss. So let's go first thing first. First, what we have to allocate in the first scenario. In scenario 1, we have to allocate net loss, correct?
Correct.
So the question is, let's try to prepare some kind of schedule here very quickly. I'm going to increase the format a little bit. Net loss. How much is our net loss? Our starting point is 170,000. Negative 170,000. 1, 2, 3. That's our starting point. Now from here we have to move. So we have partner 1. That's what we have to allocate. We have to allocate it by two people, number 1 and number 2. Number 1 is Peter, and number 2 is Dave. Again, here number 1. Now I'm gonna go with here with number 1 and number 2. And now I have pretty much my Excel spreadsheet that I want for allocation. So in this case, there's no written agreement. What that means?
Share
It will be
equally.
equal loss.
Share it equally. So how much Peter is gonna get? This one. So let's, if there's no shareholder agreement, let's do something else. If there's no shareholder agreement, I'm gonna insert here, and Peter get 50%, and Dave's gonna get another 50%, and they'll be happily ever after, or not. Depends how they feel after they share the loss. So how much Peter's gonna get? Peter's gonna get this one time 50%, and Dave's gonna get exactly the same amount. This one time 50%. Now the question is total. How much each get? Probably I have to enter here another one. Number one is Peter. And number two in this case is Dave. How much if each get? That will be total. Here after we do all this calculation, ginormous calculation, Peter gets negative 85. Dave's get negative 85. Total allocated to further allocation should be 0, right?
Yeah.
We allocated 170, and that's it. So how can we do this? Insert, I want to insert here to allocate, to locate. That should be 0. So basically we allocate, that will be equal to this one plus that one. And we have this one minus that one. And that should give us 0. So how we allocate it? Peter gets 85, Dave gets 85, and done. So now we can use this template and adding a little bit more on the next calculation when we're calculating net income agreement based on the partner's profit and profits share and losses based on the capital investment. So number 2, we have to see how much was their capital. Insert, that will be capital. And the capital is Peter invested 115,123. The other person, Dave, invested 175,123. And that's also dollar amount. Total investment that they invested is 290. Now they have to allocate what they have to allocate. Now they're allocating net income. Based on the profit, based on the capital investment. How much they have to allocate? $105,000 in this case. 105,123. What will be the percentages here? That's where we are. That's what I need this column here. That will be the 150 divided by 290. That will be his percentage, and the other person percentage will be
60%.
175 divided by 290. And did we allocate it? Yes, we allocated. How much they getting? Those amounts they getting. And we allocate the entire amount. Make sense?
Yes.
Yep.
Challenge in this type of questions. Do you see any challenges so far?
No.
Okay, let's keep going then. So the question is gonna tell you this. This will be I'm again copying and pasting directly from the questions right now to avoid, because I was wondering what to do with this rounding here. So watch with what the question says. For the determine here V and make it. So use minus sign or parentheses when entering losses. So in this case, here you can use the parentheses or minus sign. Everything is going to be okay. So which information you have to enter in the connect? That's going to be only the one that's highlighted in blue. Now, hold all the decimals into interim calculations. So once you're doing those calculations here, hold the decimals, but round your final answer to the nearest whole dollar. So can I leave it in this like this?
No.
No. What do you have to do? If you're using the Excel spreadsheet, simply put this function round and this calculation and tell me how many numbers, 0. So that will be comma and 0 and close the bracket and boom, and the calculation is going to be rounded for you. Again, here what you have to do, round, brackets, calculation of the formula that you want, comma, 0, no decimals after the bracket, close the brackets, and done. So this will be your answer. Make sense? That's how you're going to calculate the interim numbers. In the interim, you're going to hold the decimals, but when you go to the final answer, round it to the whole amount. Now let's go to check the last scenario. The last scenario will be the key here with the multiple calculations there. But I'm going to start with this. So now net income is 290,000. How many ways we're going to have to, let's start, that's the capital. Our starting point is 290,000. How many ways we're going to have to allocate the income here? First will be based on the partner capital investment. First 132 shared base is shared based on the partner capital investment. Next 100 is based on the partner services, with Danilo receiving, Danilo will be Peter 20% and Dave receiving 80%. Remaining share equally. Now, do we have enough income to follow this process? Obviously, we do have enough income, so we don't have to worry about this. Even if we don't, even if you go on the minus, keep going. I'll show you the if that's what they want, that's you just giving them what they want. That will be number 3 here. So we have two first. First one, we have to, on the first allocation, we have to allocate. Now we can go somehow backwards here. That's our net income. On the first calculation, insert will be based on capital, but we are cap. We're cap on the amount of 132,000. We cannot exceed that amount. So let's start calculating. First allocation based on the capital. Obviously, here we have to allocate 132. That will be, no, here will be 102, and the next will be moving forward. Let's put it here, 1, based on the capital. So how will be my calculation? My calculation again will be 150 divided by 290. Or, well, I don't need to do that, right? I just have to get 40% of 132. 132 times 40%. And the next person is going to get 132 times 60%. And we're going to get 132,000, which is exactly how much we need to allocate, correct? Are you guys with me?
Yeah.
Any questions at this point? So the next one will be the next 100 based on the partner service, 20 to 80. So what I can do, I can copy this part and do some modification here. And that will be number 2 will be based on the service. If it's based on the service, we're allocating here 100,000. That's 10, then one more 0 here to make it 100, and we're allocating 20% to the Peter and 80% to the Mr. Dave. And I'm actually getting the number. Is there anything left to allocate? Let's see if we have to allocate something. Now that will be equal to 150 left minus 100,000. We still have 58 left. Now the next third calculation will be share equally. So for the third calculation, I'm gonna get those two. Control C. Gonna paste it here V, and that's gonna be the remaining. Now that will be what it says here equally. And we're gonna share it equally with those two. That equally simply means 50-50, correct?
Yes.
Let's get 50% here and 50% here. So how much we have to allocate? That will be whatever left, 58,000. We're gonna allocate those 50. Is there anything left to allocate? We allocated everything, correct?
Correct.
Now what we have to do, we have to check the sum. So we have the sum here, we have this sum here. We allocated total, my total is equal to the net income, so I'm in no imbalance. My number here is rounded. You just post your answer, and that's it. That's how simple it is. The only thing is, please pay attention to what you have to do exactly. Now, what can be, is there any twists on this question? Let's see if there might be any twist in this question, and the twist can come if, for example, here says net income is not 290,000. let's say the net income here is 190,000. So if the income in this case is 190,000, do I have to stop and limit myself to 88,526? Or should I give them 100 for services? What would you say? If again, sorry, no, that wasn't the case. Here is 190,000. 190, 190 is here. 190, 123 is right here. So in this case, if my income was only $190,000, can you see it?
Yes.
So what do I have to do? Once I first do the first allocation 132 based on their capital, they're gonna get 132. The remaining to allocate is only 58. Do I have to give them 100,000 for service? What do you think? Or I can tell them, I'm sorry, I cannot give you 100,000 for service. I can give you only 58 because that's how much left from the income. Or I have to allocate 58 times the percentage, which will be scenario here. Do you remember?
Trying to remember, but I think it should be 58.
So the general rule is allocate $100,000. Give them what they want. Don't argue with the partners. We are there to give them what they want. If they want 100,000 for service to be allocated 20% for the first one, second one, 80% for the second one, give them what they want. Why? Because at the end, don't forget, the remainder is shared equally. Do you understand this?
Yes.
Reminder
Yes.
can be income, can be loss. They share it equally. If they want the way they want it, that's how you're gonna give it to them. Because at the end, watch this, then they're gonna have $42,000 negative, which they're gonna share equally. At the end of the day, don't forget, total in those two accounts should be equal to the net income that you're distributing. This is the most important thing that I want you to remember. Give them everything that they want. Even if they want here, I want 200,000. They want $200,000 here. They don't want 132. They $200,000 to be distributed in this case. Well, give it to them. Give them what they want. Even in the first place, they're start running negative. They want another 100,000 distributed 20 to 80. Give them. Now, two people, you have their partners. Now you're going to share 110,000 loss equally. So who's going to be more affected in this case? Peter or Dave? What do you think? Who get the hit if this is the allocation? Peter, of course. because his services are way substantially below Dave's services. Obviously, but watch this. If it's in the, what would be that? Let's say if the income is $500,000, then suddenly Peter get equally on the $200,000. So technically, most likely in this case, as you can see in this case, Peter investing less money. The other thing is clearly he investing less. The other thing is probably he's not that involved in the operations. So if the company, if the partnership earning just about to cover what they want, let's go 132,000, the original case here. And as you can see in this case, Peter portion even get higher. So on the high income, Peter getting more in his capital because more left for the 50-50. So he banking on the 50-50 here. He knows that he invested less. He knows that he's not going to spend that much time in the company, for which spending more time in the company, Dave is rewarded. But if the company is successful in the long term, and making the high income in the year with the high income, Peter's going to get more through he's banking on the 50-50. Now, what's going to happen? Imagine this. Let's think what's going to happen if the company start losing money. Let's say the company losing 50,000 is the loss. Now, what's going to happen in this case? Can you see? So in that case, Dave is protected in the year of loss through this structure of the receiving income or sharing the capital, sharing the income. Dave is protected. Even in the year of loss, he still have a positive amount going in his account. Why? Because he's simply working more and he invested more. So that's why I want you to understand here at this point, if you're going with the partnership and if you're doing the partnership, it's very important how you're going to make the agreement in the very beginning. Is it going to be the short-term agreement? Is it going to be a long-term agreement? Because is it going to be for the protecting yourself when the company losing money, you to still make sure that you're making money? But think about that and see those implications by simply playing by with the numbers here. Nothing more, nothing less. So let's leave it on the original case, which was here with $290,000, and let's leave it there. Okay, problem with this question? Do you see any problems with this type of question?
I don't.
Okay. If you don't see, let me find another question for you. I believe you understand that the final exam is comprehensive. So I have to find a way to test you on the questions from the previous chapters, which will be not ginormous, but I still want you to show me that you still remember what happened in the previous chapters. So most likely I'm gonna ask you for a question like this, for example. Let's go another question here. Can you guys see my screen? That's too big.
Yes.
Okay.
Yes.
So, oof, that's too weird. On August 31st, Johnson purchased 20,000 equipment on 1 year, 9% not payable. Journalize the company purchase of the equipment, the accrue of the interest expense on May 31st, which is the first year, and the payment of the note plus the interest on August 31st. So since it's 1 year, 9% not payable, let's go with the journal entry one after another. What will be the first journal entry? Purchase the equipment, right? Debit will be equipment. And that's the purchase price for that equipment. We already know it. Sorry. I'm trying to make it a little bit bigger. And that equipment is for amount of $20,000. Correct? Are you guys with me?
Correct.
You guys with me?
Yes.
Yes.
Okay.
Yeah.
Then we're going to have here credit. What will be credit?
Note payable.
Not payable. With the same amount. That will be the first one. Second one. We have to do the journal entry on March 31st. Second, let's say this one, let's push one down. That will be purchase. So we purchase the equipment, we have the equipment. Now we have to do the year end. So from which chapter you think this one will be? This question is.
Liabilities.
Liabilities. So what that means? On the year end, I have to show what?
Interest expense.
What?
Interest payable.
Which will be liability.
Yes.
Make sense? So if the questions come from the chapter with the liability, that means you have to show at the end, you have to show the liability. That's how you easily can kind of relate the question. So what do I have to do here? I have to show debit interest expense.
Credit interest payable.
Yes. And credit interest payable. Now, the only thing that we have to calculate this amount, and once we know that the 9% interest is on the annual basis, right? How much the total interest we have to, annual interest we have to pay? $20,000 times 9%, we have to pay exactly 1,800. How much is per month?
150.
150 divided by 12. 150. How many months we have for the year end? year-end is March 31st. And that gives us from
7.
September, October, November, December, January, February, March, 7 months.
Doesn't the question say May 31st?
Yes, it does say May 31st. Thank you. So more than one. Let's go with May 31st. Caroline, make sure you get counting too. So again, let's go now. September, October, November, December, January, February, March, April, May. We're going to add 2 more months. It's going to be 9 months, right? August 31st to May 31st. You know, now the May 31st become a kind of crucial date in my life, current state of my life, because on that day, most likely I'll be allowed to actually put a weight on my my feet. But let's see if that's going to happen. So, how many months we have here? 9 months, correct? Are you guys with me?
Yes.
Yep.
So 9 months. So what will be the amount of my interest expense? 9 times 150. Oops. Equal to this one time 150, and it's going to be 1035, and this one will be 1350. Boom, done. Last one is the payment of the note plus the interest. So we have to pay the note and we have to pay the interest. Let's do it. That will be combined entry, correct? Combined, that will be more. So payment of note plus interest. So what are we going to pay first? Debit. What do you want we to pay first? We have so many things to pay.
Interest payable?
Interest payable. How much my interest payable? Well, the same, like above, 1,350. I have to pay this amount. What else I'm going to have to pay?
Note payable.
Let's pay the note payable. Debit, note payable. And the note payable, I have to close it. That's 20,000. I have to close that one. What else?
Interest expense.
Debit interest expense. How much I have to pay for the interest expense?
450.
That will be equal to my total minus 1,350, and that's going to be 450. In total, how much cash I have to pay? Well, whatever comes. And that will be credit cash. Let's change this to credit. And this is the credit here, cash. Which is equal to all those 3 amounts. This plus this and plus that. 21,800. Anything scary with this type of questions? Obviously, this question is for the liability. Now, the question for me, it will be, am I going to choose some combined question which have not only not payable, but have some warranty and anything like that? So I can test you on few things by using one question, or I'm going to split it on different questions. That way I have to decide on, and that's what I have to decide on. And once I have the answer, next time I can communicate that one with you. Let's see first one question with the warranty as well. So we can move from the this so you can get some exposure on the warranty. Just give me a second here. Actually, that's not gonna work. Okay, I have it ready. Let's go here. Okay, this will be the question. Let's make it a little bit bigger. This company offer warranties to these lawn movers. Estimated warranty expense is 2% of the sales. At the beginning of 2020, estimated warranty payable account has a credit balance of 3,400. During the year, this company has 680,000 sales and had to pay 10,700 in warranty payments and repairs. So what there's additional requirements for this question is, just a second, I'm going to show you the requirement. And the requirements, let's do some changes here. Format cells. Let's get rid of this. And there's another one here. (2022) is our year. What's the balance of the end of 2022? And indicate whether the balance is debit or credit. So what we have to do before we even start the question, we can prepare this T account here for the warranty. Which account they're asking us? Warranty liability. So you don't even have to think which account they're asking. You have the name of the account right in the question. So grab this name, put it here, prepare the warranty liability. What kind of account is this? Asset account, liability account, what is it?
Liability account.
Liability. What's the normal balance? Debit or credit?
Credit.
Credit. So we're going to have here debit and we have here credit. So normal balance here will be, this account will be beginning balance always going to be on the credit side, which in fact check with the questions because the question tells you that this account has the credit balance 3,400. So our beginning balance is $3,400 we already have in this account. Okay, so what we have to do, we have to figure out what will be the ending balance of this account at the end of the period. Let's line those one on the right side. So there we go. Let's go to journal entry. Have to probably increase this a little bit. Let's increase it to 14 and let's work. First entry. Help a little bit because I forgot all the counting.
Debit warranty expense, credit estimated warranty payable.
But we're not working, you're correct with the estimated warranty payable, but now we have to adjust our terminology to the warranty liability, right? Because the question here asks us for warranty liability, but technically you're correct. It's an estimated warranty payable. Now it's a liability account, but in this case, we just simply call it warranty liability. So let's go debit, warranty expense. Later on, Elena is going to find out the warranty expense is actually not tax deductible. So you cannot deduct it for tax purposes. But in this question, we're going to ignore that, and we're going to go with the our estimate and warranty expense will be 680,000 times 2%, which will be 0.02, right? That should give me 2%. So my amount will be $13,600. And as Caroline says, let's go with credit. Estimated warranty payable, but in this case, we're just going to stay with warranty liability, which will be exactly the same amount, which is $13,600. Okay, we have the first entry. So what I'm going to plug here? I have to plug here in this account. I already have entry which is related to this account, correct? Can you guys see it?
Yes.
Yes, so on the warranty liability, I have to plug here number which is 13,600. Next thing, what's happened next? We actually paid $10,700 on the warranty payments for repairs. So now here the question can say is we exchange the items on the warranty with the new items. And that's gonna a little bit change the account that you have to credit. But in this case, let's say number 2 of this is the warranty expense. To match the expenses or warranty of 2% accrual and the next one is the actual warranty paid. Warranty claim. So what will be that? Debit. Can I go with warranty expense again?
No.
No.
Warranty
account?
liability.
Warranty liability. And how much will be that? Exactly the same amount, $10,700. And we're done with this. So now credit. Which account are we going to create? I said, it says here, payments for repairs. So we pay for repairs. So which account are we going to use?
Cash.
Cash. Every time when it doesn't say anything, we use cash. But if it says that we replace those items under the warranty loan movers with the new one from our inventory, then create the inventory account, right? That's why we have 2 options. So now we have another entry which is related to our warranty liability account. But now it's on the debit side. On the debit side, we have entry which is of $10,700. Okay, any more entries here? No, right? So the last thing that left is to figure out what's going to happen in our warranty liability account. Where are we going to end up? Well, simply we're going to get the beginning balance plus the credit minus the debit, and that's going to give us, oops, false. 6,300 ending balance. Make sense? So if we have to explain what's the balance of the warranty of the 6,300, debit or credit, obviously it's credit balance. So in that case, what you have to think, if you are the manager of the company, is the warranty, estimated warranty expense enough to cover your actual warranty? Yes, it is. Is it too high? I would say it's hard to tell. Now we have to see one more year. If we see the same pattern, then we have to reduce it. Because don't forget, warranty, but you're going to see this in taxation. Warranty expenses is not tax deductible, but actual payment of the warranty is tax deductible. So we cover a good amount of questions today, which is a good thing. We cover question from chapter 11. We cover question from chapter 12, and we have a question from chapter 17. So now we have to go with chapter 15, 16, 13, 14, and 10. 1, 2, 3, 4, 5 chapters more questions, and you should be okay for your final exam. So now I can label those one, question 4, and that will be your question 5. And if you stay with me, I can show you where exactly I'm gonna post those ones so you can see it right away. And the next thing that you have to do is get those questions and start your exam preparation. Okay, and let me share my screen here so you can see where exactly I'm gonna post those one. Now I already opened for you. Let me share my screen.